Alright, so welcome back to the channel, and I'm basically going to be walking you through how I take my trades, because I kind of look back at the videos I make and I kind of saw that I don't really explain the concept behind how I take my trades. So that's what I'm going to be walking you through in this video, and make sure you stay tuned to the end of the video so you can better grasp whatever I'm going to be saying about how I trade and all. So do also like, share, subscribe to the channel as well if you are just coming across the channel for the first time. My name is Samuel. I'm a Forex trader, and I guess that's all about the introduction. Let's just get into the business of the day. Yeah. Alright, so let me do a recording as well on the screen so we can be on the same page. Alright. So basically what I look out for, I'm already on the train, don't mind that. So what I look out for, let me state it out first before we go further, so it can be bold. Now the first thing I look out for at the start of the week is the high and low of the week. High and low of the week, and low of the week. And after I've mapped out the high and low of the first 2 4 hours candle to form of the first 2 4 hour candle, 4 hour candle to form, then to form. And also the next thing I look out for is for my psychological levels, and also my psychological levels, and I also map out zones. That's one important part of my strategy. Alright, so I map out my zones, then I mostly use price action because I'm a price action trader. Price action. Now let's go over everything I traded one after the other. High and low of the week. High and low. Okay, let me say this very well. High and low of the. Let me bring this here. High and low of the first two 4 hour candle to form for the week. Candle to form for the week. Now that being said, now high and low of the first 2 4 hour candle to form for the week. Now that means the highest point and the lowest point of the first 2 4 hour candlestick. So I map out the high and also the low. Let me give an illustration. For example, this week that we are currently on, this happens, and I do that on the 4 hour time frame. Let me know. It's better for me to say that. Alright, so I do that on the 4 hour time frame, and the first thing I do is toggle on my period separator. And how do I do that? I just right click, come to my settings, and I just go to events. Another event, I toggle on session breaks. Okay, yeah, I see on events, then toggle on session break. Then okay, it's going to bring these grid lines that we are seeing here. So how do I determine the first 2 4 hour candle to form for the week? As you can see, today is currently Thursday, this is Wednesday, this is Tuesday, and this is Monday. Now market opens around 10-11 p.m. On Sunday, and the first 2 hour candle to form is this and this. Now I map out the highest point and the lowest point price ever got to, and if you look closely, the highest point price ever got to was this level here that I highlighted here. let me increase this. This was the highest point, and this was the lowest point price ever got to. That's just basically it. I mark it out, and the reason why I mark this out is just to ensure that I know the directional bias. That's how I determine the directional bias. I map out the high and low of the week so I can better determine in what direction the market is most likely going to move. So that's basically why I map out my high and low of the week. And how I determine my directional bias for the week is by the first candlestick to close bearish or bullish. If it is going to be a bullish week, we are going to have a bullish candlestick close above the high of the week. That's the high of the first 2 4-hour candle to form for the week. We are going to have a candlestick close above the high of the week. And if we are going to have a bearish week, we are going to have a bearish candlestick. We are going to have a bearish candlestick close below the low of the week. That's it. But in this case, we had this bullish candlestick, and this candlestick is called the directional candlestick. For me, it's called the directional candlestick because it helps me determine what side market, in what is this market going to be bullish this week, or is it going to be bearish? That's what it helped me to do. So that's why I call it the directional candlestick for the week. So after that, I come to my 1 hour, just to check for things clearer, and also I come to my 15 minutes. So let me go back to everything I treated here. Yeah, I unlock the first 2-hour candlestick to form. I think I've touched on that. Now I map out my psychological levels. And psychological levels, this is the concept I actually learned from someone. And psychological levels are actually round up numbers. People tend to pay attention to the big guys. They are the ones that actually push the market. So they pay attention to key levels, key zones. And it's just like you going to the market and you say, oh, I want to get something. They call the price for you probably $2,000, and you'll be like, oh, can I get this thing for 1,500, or can I get this for 1,000? So it's just like you bringing it down to the next psychological level another human being is going to most probably talk about. So you it's just a psychological thing. So just like going to the market, oh, I want to get a pair of shoes, they call it for you $2,000, just to better illustrate it. You say, oh, is it possible for me to get it at 1.5? And you should know that at that particular point, it's not only you that is doing that kind of thing. Another customer might even come and do the same thing. So the price, the psychological level 1,500 is the next number the person can actually think of. So, and in this case, I map it out. We have something called the main psychological level and the sub psychological level. The main psychological level are actually 100 pips apart, but in my case, I use the sub psychological level a lot, and the sub psychological level are only 50 pips apart. So if I map, for example, let's check the coordinates of this one so we can see. So okay, let me do that again. So you can see this is 1.34500. Now the next psychological level above it is going to be that's going to be 1.3500. 1.34500. You see, you have 1.3500. So it's just 50 pips apart. The next one is going to be 1.35500. I hope you just grab what I'm trying to talk about. So can you see 1.35500? So it's just 50 pips apart. So that's how I determine my psychological levels. And also one other thing here is zones, and zones is actually a concept I actually got acquainted to when I read a book. I'm going to be attaching it to I don't know the title of the book, actually I can't remember it, so I'm going to attach it to the screen. And it's a concept that I came across in the book, and it works so well. I backtested it and I saw that it actually works very well. So that was when I adopted it, and just it serves as an extra confirmation for me whenever I want to enter a trade. You get it? So, and as you can see, it's been working. I'm still going to take you over the trades I've taken in the past 1 month, 2 months now, so you can actually just see how the strategy works. And the next thing is price actions, and price action is simply how price moves. It's simply how price moves in the market, how price move, and it encompasses what we call market structures, candlestick formation, and the likes like that. So, and I use chart pattern as well. Chart pattern is one thing I've not talked about, and I don't think I have actually added it here. Chart pattern. So I was talking about price action, simply how price actually moves in the market. So I use chart pattern. I majorly use the W chart pattern, and also I use the head and shoulder on in rare cases, and I also use the W pattern, M pattern, W pattern. These two actually works like magic, and as you can see, we have an M pattern currently on this trade. That's what gave me much more confirmation to actually going on this trade, and you can see it's moving very well in our favor currently, but not so soon actually. So let me just go back and not digress too much. So the chart pattern actually works like magic actually. So, and I don't just, it's not a standalone thing, these are a list of confluences I actually use, and if I actually see like 3, I go in for a trade. For example, if I see chart pattern, if I see zones, price respecting zones like it did here, price respecting zones, I have chart pattern. This is an M. This is the okay. Let me draw this so you can see. Let me use this. So from here we have the first leg of the M. We have the correctional move. We have the impulsive move, and now we are having the correctional move. Up until this point, hopefully market actually gets to that point before it's reversed. So that's that about that. So that's an example of an M pattern. So if I want to go in aggressively, but I really do not recommend you going aggressively if you're, especially if you're a beginner. Don't go in aggressively. And I also still trade conservatively, but in rare cases I go in aggressively if I probably just want to flip, but that's not a good approach to trading. So ensure you have extra confirmation. For example, if I got in on this trade, I had the zones here, I had candlestick formation indicator. So this candlestick closed bearish. I actually entered in. That was when I entered in for this set that I am actually in on currently. And you see, that's just it. And I'm also saying that the overall movement that is currently going to happen is going to be a sell off of experience actually. So that's just basically it's none of this is actually a standalone thing. It's a confluence, and confluences are things that you put together that helps you make informed decision in the market. So all that being said, let's go in and check some of the trades I took the previous week, so I can just show you. Okay, let's do this immediate week, this week that just ended. Okay, this is Friday, this is Thursday, this is Wednesday, this is Tuesday, and this is Monday. Now let's go to the 4 hours time frame. First, let's bring this. Okay, sorry, let's bring this and bring it here. Let's bring it here. So 4 hour time frame. Yeah, so this is on Monday, yeah. So this is the low, and this is the highest point price ever got to. Yeah, this is the high and low, the first stock, and I don't want to map it outside. I have everything plugged, but still let me bring it out so you can get what I'm trying to say. So this is the low. You can see this is on Monday, and this is the high. Okay, I've not picked the two, and this is the of the week, and I add a directional candlestick closed above here, which is this bullish candlestick you are seeing here. So I forecasted I'm going to be having more of buys this week. However, I took a loss the first day. Let's go to 15 minutes time frame. Fifteen minutes time frame. Yeah, so this is on Tuesday because I don't trade on Mondays. Most times I don't trade on Mondays. I don't even trade on Mondays. Yeah, so this was the trade. Now I got into this trade around here. And what was I looking at now? I saw price give this bullish move, and this is a zone. This is the high of the week at exactly this point here. This is the high of the week, and price give an impulsive push around that region. So immediately I saw price closed above the psychological level here, the zone here, and also the high of the week here. I predicted we're going to have much more of buys, so I locked in the position here, but eventually it's price came back to stop me out, and that was that about that. That's no long cap. Then the second day came. This is the low of the week. I saw this is something like a morning star forming here, and I saw that it closed above this low of the week, so I locked in the position immediately. I saw the bullish presence in the market around this region here. So price came back to actually stop me out, and you should come to understanding that no strategy is the holy grail. There is no holy grail in there's no holy grail strategy. No strategy is the holy grail. You are still going to have losses. It's not as though it's not going to work, but what more matters is that your wins are able to cater for your losses whenever rather you actually have them. So that's the basic thing you have to come to the understanding of. And I was predicting a sell, and I was expecting my price to come to this place for me to have a sell, but price did not actually come to my zone, and that's fine. It is fine to be left out of it on a trade. As long as you are following your trade, following your plan, it's still a good trade. You not trading is still a good trade. You must settle that within you. So on Wednesday, that was when I caught this trade, and as you can see, price rejected off of this region, and I mapped it out. And this is a zone. Normally this is a zone here, so I just mapped this zone, this mini zone here as well. I mapped it and extended it to the future, and price came into this zone, gave a weak rejection, weak rejections around here, closed bullish above. Let me show you this so you can better grasp that. So it's closed above this zone here. Immediately I locked in my position. On this, and that was when we had this bullish move to the upside. Now there was a trend line coming. Okay, I deleted it already, but there is a trend line coming from a counter trend actually coming from this region, and this is a high of the week. And as you can see, we've been seeing rejections from here, and this is a very strong zone, and this is also the high of the week. So I predicted the price will just come over, extend probably to the counter trend that I had there. I'll probably just look for a screenshot of that trade and add it here, but I deleted the trend line already. So I predicted price was just going to come and tap the trend line and just come down, and that was what exactly it and that was what it did. It just came. It did not even tap the counter trend I drew, and once I was seeing multiple rejection, I was adding my position off of it. Once I was seeing weak rejection here, weak rejection, immediately this candlestick came here. I just started putting in the remaining of my position, because I use the dollar cost averaging system. I think that's one thing I will still talk about in later in the video. I use the dollar cost averaging system, and that's just help you maximize the move, whatever move the market is giving you. It helps you maximize it better, and it helps also in risk management and all. So we had 2 trades already that has already set us up for this trade. Actually catered for the first 2 losses I incurred for the week, this one and this one. Okay, let me just leave this, and this one set us up just 1%. This we had this trade as well. There was a trend line coming from the 4-hour time frame, and I waited for price to tap into this zone. This zone is also a very strong zone. I was expecting a reversal off of, a rejection off of. So immediately price actually broke into this, broke above this this zone that I had here. I already marked it out as my area of interest, and price came here and gave a weak rejection. I did not enter. I was patient. Now one thing I would love to explain is I'm more of a price action trader, and I just wait for price to act, then I react. I just react to whatever price movement is actually happening. So immediately I saw price, I went to the 5-minute time frame. Now let me leave this here so you can see what I'm saying. On the 5 minutes time frame, we have something like an evening star. We had an evening star, the network. Now we had an evening star. Can you see a weak rejection, and then it can't do a bearish candle to close out? So immediately I saw this price action on here, although it's not some people might not really agree with all this, but immediately I saw that it served as a confirmation for me. So immediately I logged in my position, and I started entering my position as well. And this was the first zone. I think I've not mentioned this. This was the first zone I was expecting market to reject off of, and price came, broke it, and I was like, okay, I'm going to be looking out for price reversal, rejection off of this level, since there is a trend line coming from the 4 hours time frame. And then we had this play out. Then that already set us up. This move alone is a 1 to 4 trade, so it gave us 3%. This whole trade for the week set us up about 3%. Yeah, so that's just that about that. So I just wanted to explain how I take the trades with this strategy that I've actually come up with. And here as well, you can see this is also a zone I was looking out for price to reject off of, but I was patient enough for, initially I was looking at this eye of the week for price to come down, and then I have an entry, but price did not do that. It skipped me, it started going in my direction, but I was still patient not to just rush in immediately on this. I was patient enough not to rush into this trade around here, because I know market might still as well respect this place and probably just create an M pattern and just start coming down. But I was waiting for a bullish candlestick to close above the zone. So immediately I saw price close above it, I actually locked in position, and I opted out around this region here, because I was seeing price action, and eventually it's my stake profit with just a pinch, but probably it might not have even hit it ever. Sorry, probably close cost of spread, but I closed out manually on this trade, and that actually sets me up as well. So this trade as well, this one actually came back to a stop loss, and then we're having this trade which is playing out currently. So that's just the strategy. I just wanted to explain how everything works. I am going to be breaking even now, because this trade is already more than 1 to 1 already. This is about just like 1 to 1.5. Let's do the calculations together, and we have just 14 pips stop on it. Yeah, this 18 pips already, so I'm going to be breaking even on this trade as of now. So I just wanted to explain how I trade. So whenever I drop the weekly outlook and whenever I drop the sorry, I'm distracted. I'm watching price movement. So whenever I drop the weekly outlook and also the weekly recap, whenever I drop the weekly outlook and the weekly recap, you'll be able to have a better understanding of what I'm doing in the market. So that's why I'm making these videos. And also I'm working on something interesting as well. I'm not sure how soon it's going to be running out, but it's going to be rolling out soon, and I'm going to be giving further updates through the community post and as well probably in a video. So make sure you stay tuned, and if you are yet to subscribe to the channel, please kindly subscribe, like the video, share, and also leave a comment in the comment section. And I'm also going to be adding a means for you to reach out to me in my bio, so make sure you check that out. And I guess that's going to be it for this video, and I'm going to be seeing you on the next one, so stay blessed.